Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group. I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what's going on in the markets?
Hey, thank you, Jeremy. Thanks for our listeners jumping on another call. Well, we had the major U.S. indices fall. So we had the Nasdaq and that Russell 2000, that small cap area, down about 1%. And we had the S&P 500 down about 0.5%. Sector performance was slightly positive overall, but dragged down by financials and technology. Nvidia, large technology company, widely followed, came out with strong fourth quarter results, upbeat outlook, but it failed to lift the markets. That stock, even with great earnings, sold off about 6.5%, really pressuring the overall tech area, not to mention the semiconductor sector that it's in. So we saw software stocks in general decline further due to some AI tools, some released by Anthropic. Now, if we look at commodities and bonds, we saw gold futures rise about 3%. Silver surged about 11% to about 94.4 per ounce. U.S. Treasury yields continued falling. So we saw the 10-year dipping below 4% for the first time in 3 months. Overall defensive investor. So overall, we saw a very defensive approach to the market in general. U.S. economic data. So we saw the producer price index, the PPI, that rose about 0.5% month over month in January. Now that's hinting at some potential inflation acceleration, just a hint at this particular point. We did see the service sector margins jump, implying some tariff-related costs passing through to the consumer. Rare earth metals, some shortages pushing some costs higher for aerospace and some semiconductor firms. And the U.S. consumer confidence, that edged up to about 91.2 from about 89 in February. Now, on the international markets and trade, we saw China dominance in the rare earth. Now, that's expected to be some key topics with the upcoming meeting with President Trump in Beijing. We saw crude oil up about 1.5% on expectations that OPEC may raise output in April. Now, Japan, they appointed their pro-stimulus central bank board members. Now, that weakened the yen, pushing the Nikkei 225 up to new record highs with some soft inflation, may influence the BOJ's rate plans. Australia, their CPI increased more than expected to about 3.4% year over year in January. That's raising some odds of another rate hike. And now over in Germany, their consumer inflation, now that eased. That came to about 2% on some lower energy costs and a stronger euro. Canada's Q4 25 GDP, that unexpectedly contracted 0.6%. Now, the week ahead, it's going to be markets, geopolitics. That's going to be the backdrop. We look at oil and gas. Prices jumped as U.S. and Israel military action against Iran expanded across the Middle East. Energy production is being affected by air campaigns adding to some inflation risk. If we look at interest rates in the U.S. dollar, that rose to start the week and renewed inflation concerns. And we just got some ongoing AI disruption. Some shifting of trade policy continued to cloud the investor outlook. Overall, we saw bank stocks weaken after the UK mortgage lender collapsed, raising some concern about lending standards, financial stability, that private credit market. You're starting to hear a bit of that coming up in the news, and what stability, what weakness might be in that area. So we look at monetary policy and rates. We saw expectation for the Fed rate cut for 2026. Now it's been reduced a little bit. We saw the labor market data this week. That carries some added weight ahead of the March 18th Fed rate decision. Now, U.S. economic data to watch out for. So on the employment side, we're going to be having the ADP private payrolls and the Challenger job data and non-farm payrolls coming out. Economists are expecting about 60,000 new jobs in February, following some January strong reports. Other key reports to be mindful of will have the ISM manufacturing PMI, the ISM service PMI, the January retail sales. Keep in mind, all these things that are bubbling up, all these economic reports are setting the tone for the health of the economy. Are we strong? Are we moving along? Are we weakening? These are why you want to pay a little extra attention to some of these reports. Now, we're kind of really here at the tail end of earnings here, but we got Target coming out actually today, and Broadcom will be reporting after the close on Wednesday. That'll set another tone for that semiconductor side of the market, as well as the tech space. And then internationally, we'll have China's new PMI data due out on Tuesday evening, Australia's Q4 2025 GDP. That comes out on Tuesday, and Europe's CPI, PPI, and retail sales will all be reported this week. Jeremy?
Well, thank you, Graham, for the information. I had a question for you. So you had mentioned a little bit about the geopolitics going on that started over the weekend with all the U.S. and Israel with the strikes in Iran. How do you see that affecting, the investment markets, but also just in general with clients?
Yeah, I think obviously it's horrible. You hate to see these things go on, but they do happen, and they tend to be short-lived. If we're looking at a protracted war, I think we have bigger issues, more volatility ahead of us on the downside. If history is any guide, at least in modern history, they tend to be a little more short, reactionary, where we saw a pretty good dip. I think this morning the markets rebounded a good bit. And then I think it was Saturday and Sunday when the attacks were launched. And the futures were down about 600 plus, and then kind of recovered a bit on Monday, down a bit today, and then recovered. So I guess, long story short, we just got to wait and see. Don't make portfolio decisions. Don't make long-term decisions on horrible but short-term events. And we're expecting this one to be short as well.
Gotcha. Well, Graham, we always appreciate the information, expertise, and thank you to our listeners that check in with us every single week, and we look forward to seeing you next time. Have a good week.
Take care.